Welcome to today's market report.
World stock markets stabilised on Tuesday and oil prices regained ground a day after heavy selling of risk assets, as investors assessed the level of contagion stemming from distress at developer China Grande and awaited central bank meetings. MSCI's gauge of stocks across the globe edged up 0.13% following Monday's biggest percentage drop in 2 months. Wall Street's main indices ended mixed after solid equity advances in Europe. Price moves in bonds and currencies were relatively subdued. On Monday, safe haven assets drew bids as investors became risk-averse. Gold pushed higher again on Tuesday in a sign of investor caution. Investors were focused on the situation at Evergrande, where persistent default fears eclipsed efforts by the debt lending group's chairman to lift confidence, as Beijing showed no sign it would intervene to stem any domino effects across the global economy. There are some investors willing to step back in after a pretty big whack yesterday, according to Horizon Investor Services. The idea that Evergrande possibly being contained has probably gained a little bit of steam today. On Wall Street, the Dow Jones fell 0.15% to 33,919. S&P 500 lost 0.08% to 4,300. The Nasdaq added 0.22% to 14,700. The CBOE Volatility Index VIX fell 1.35 points to 24.36 after hitting a 4-month high a day earlier. The Pan-European Stock 600 Index rose 1%, with Germany's DAX rising 1.4%. Canada's main stock index gained as the re-election of Prime Minister Justin Trudeau's Liberals reassured investors that the outlook for the economy would continue to improve. Central bank meetings in the United States and elsewhere in the world were soon to take center stage for markets, with a Fed meeting due to conclude on Wednesday as investors look for when it will ease its bond buying program. Benchmark 10-year U.S. Treasury notes last fell to yield 1.3243% from 1.309% late on Monday. Oil prices edged higher in a seesaw session as concerns about the global consumption outlook counterbalanced the struggle by big OPEC producers to pump enough supply to meet growing demand. U.S. crude settled up 0.4% at $70.56 per barrel. Brent settled at $74.36 per barrel, up 0.6% on the day. Spot gold added 0.5% to $1,773.09 per ounce. On the FX front, GBP/USD is currently trading at 136.55 and around flat for the day, having travelled between 136.41 and 136.93. The price holds near 4-week lows on Tuesday, while traders await the outcomes of both the Bank of England and the Fed meetings this week. Broader risk sentiment remained under pressure due to Chinese property company Evergrande's debt troubles and the prospects for the Fed's taper before the end of the year. The cable is off Monday's low of 136.40, its weakest level since 23rd of August. The British currency has received some support from a record $137 billion demand for its first green government bond amounting to $10 billion. However, the mood remains cautious about potential economic repercussions from Evergrande's debt problems as well as the Delta COVID spread. GBP has been regarded as a risk-corrected currency due to the UK's twin deficits, so what happens in global equity indirectly impacts the value of the pound, especially versus the dollar, which is negatively correlated to risk appetite. Analysts believe that what's going on in China will not impact the Fed's decision in terms of its tapering policy. The Fed is expected to wait until the 2nd to 3rd of November meeting to make an official tapering announcement, with a likely start in December. Eurodollar is on the verge of a bullish correction within what is otherwise a longer-term bearish environment. The bourse is currently moving in and eyeing 1.1750 target. The dollar was flat on Tuesday and was expected to struggle to advance as the improved pandemic backdrop may soar investor appetite for the safe havens, including the greenback. The dollar index is trading at 93.19.
This is today's market news. Thanks for listening. We'll see you next time.